This is BTV Business Television.
Hello, I'm Taylor Tone.
And I'm Jessica Katuchak. Welcome to BTV Business Television.
This week on BTV, we'll see how one gold developer is using a unique business model to fast-track production.
It's a fantastic time to be in the gold space. We have $2,500 gold, and I think we're in really good shape for our investors to continue to add value.
We'll get the latest on the approaching green steel revolution.
Very excited about what's happening in the market right now, and very happy that we have a unique product that can actually help that transition to decarbonize the steel industry.
We'll see who's the new player in the residential solar market.
We have 29 locations from Halifax to Victoria, and we're planning to scale up in the US, use the public markets to raise capital and deploy our model.
And we'll shine a light on some exciting ETFs that BMO has to offer, as well as some financial planning tips you won't want to miss.
All this and more ahead on BTV Business Television. Any company developing a gold project has two key goals: get the project into production and establish positive cash flow as quickly as possible. The same applies to Contango ore. Fortified by a joint venture with Kinross, Contango has developed a business model that has enabled it to reach production at its Manh Choh project in Alaska in a remarkably short time frame. This unique approach has enabled Contango to quickly get a foothold in a very demanding space.
Rather than develop our own mill and tailings facility and all that, we are simply using the one that Kinross has operated at the Fort Knox mine for 30 years. In today's world, if you were permitting a tailings facility with hundreds of acres of impacts to wetlands and waterways, that would take you at least 5 years, maybe longer. By not building a tailings facility in the mill, we minimized our environmental impacts, which allowed us to be able to permit the project start to finish in about a year and a half. So we saved in capital, we saved on time, and we don't have that typical brand new mill startup. Fort Knox Mill's been operating for 30 years, so they understand and know the mill really well.
Another unique characteristic of what Contango calls its hybrid royalty model is the fact it only has 12 employees.
When you look at the amount of cash flow per individual employee, it's a very high ratio. We're cash flowing $6 per share per employee. The revenues we're generating is over $12,000 per employee. And that is identical to what the royalty companies do. That's why they have such good, strong valuations.
In addition to these impressive valuations, Contango recently reached an important milestone.
So at Manh Choh, we achieved our first gold production in Q3. We're going to generate about 67,500 ounces of gold for our credit. That's going to generate a lot of free cash flow. Our all-in sustaining costs are $1,116 an ounce. We have gold at $2,500, so you can do the math. We're going to generate a lot of cash flow. The mine itself will produce over 200,000 ounces of gold. It's not a small mine. It's 8 grams per ton. It's one of the highest grade open pit gold mines in the world. So it's a very robust project.
Given Contango's recent successes, gold analyst Richard Gray believes the company's direct shipping ore approach can continue to provide an important competitive advantage.
Contango's upside is extremely high because they can use this model multiple times over and add to their production profile very quickly without having to access capital markets or use a lot of debt, or really to dilute the share count much more than it already is.
Contango already has a pipeline of projects that they believe will be a good fit with their business model.
We have 2 other projects that are right behind Manh Choh, our Lucky Shot project and our Johnson Tract project. And our 5-year plan is to develop those using that direct shipping ore model, not building a tailings facility and a mill and a power plant. Because they're high grade, we can direct ship it to an existing facility.
With production of its first gold bars and the promise of its Lucky Shot and Johnson Tract projects, Contango is feeling a rush of momentum.
It's a fantastic time to be in the gold space. We have $2,500 gold, and we're generating cash flow, and we've got some exciting exploration projects that we know we can advance with our existing cash flow. I think we're in really good shape for our investors to continue to add value.
Contango's 5-year plan is to get the Lucky Shot and Johnson Tract projects online and increase gold production to about 200,000 ounces a year. Thinking of incorporating ETFs into your portfolio? BMO offers 2 all-in-one products designed to make the job of building a diversified portfolio easy.
BMO's asset allocation ETFs take care of the heavy lifting when it comes to investing. With automatic rebalancing and built-in diversification, they provide a simplified approach to managing your portfolio. These ETFs provide exposure to a broad mix of global stocks, ensuring you're well diversified across sectors and regions, whether you prefer a conservative, growth, or an in-between approach. Recently, BMO ETFs introduced T-Series, available on the balanced and growth portfolios, specifically designed for retirees who often face the challenge of generating both growth and a steady cash flow from their investments. These ETFs solve this problem and simplify retirement planning by offering an automatic withdrawal plan, allowing investors to receive a 6% annualized monthly cash flow. Visit bmoetfs.com to learn more.
Coming up on BTV, more companies to keep on your radar.
We've got a unique product that is necessary to decarbonize the steel industry. And we've got a proven team to be able to deliver not only our current operations, but also potential expansions.
We'll be right back. You're watching BTV.
The last time we spoke with David Cataford, CEO of Champion Iron, he focused on the potential of his company's high-grade iron ore product to help decarbonize the steel industry. Well, that potential is becoming a reality.
Just in the past year and a half, we've seen the world completely change. We've seen over 100 contracts be signed for greener steel products. So very excited about what's happening in the market right now, and very happy that we have a unique product that can actually help that transition to decarbonize the steel industry.
The steel industry, which represents nearly 10% of global emissions, is in transition. High-grade iron ore is enabling a move away from coal-powered furnaces to cleaner electric arc furnaces, making it an extremely valuable commodity in the green steelmaking process.
The time required to bring a new high-grade mine into operation is between 10 to 14 years. So we fully benefit from that because we produce exclusively high-grade iron ore, and we've accumulated over the past 10 years billions and billions of tons of this high-grade type material in other projects surrounding our Bloom Lake operations to eventually bring more production into the market. This is why we're currently investing just about $500 million so that we can upgrade half of our tons, or 7.5 million tons, to 69%, which would be one of the highest grade materials in the world. When you're over 67.5%, you then qualify to be able to sell into these electric arc furnaces.
High-grade iron ore represents a niche market which commands premium pricing. This in turn helps to dampen the effects of a sometimes volatile industry. But that isn't the only benefit producing high-grade iron ore provides.
We had a clear disadvantage in the past of selling tons into the Chinese market. But as we get into this higher grade iron ore, we then start selling more into Europe, the Middle East, the US, and Canada. So these are all markets that are much closer to home. So you take one of our largest disadvantages from the past, and we're converting it to an advantage compared to the other iron ore suppliers in the world.
But the benefits don't stop there.
Canada has recently included high-grade iron ore on its list of critical minerals, which gives access to different funding, different potential government subsidies to be able to develop resources, access to infrastructure funds to be able to bring power to develop the ports. So it really positions us favorably to be able to access those types of funds.
In order to take advantage of the game-changing opportunity its high-grade resource provides, Champion recently completed a $700 million Phase 2 expansion at its Bloom Lake mine. Collectively, with expenditures by its prior owners, Bloom Lake now benefits from over $4.5 billion in investments, representing multiples of Champion's recent market valuation.
When you look at our ramp up and the expansion that we made at site, it brings us from roughly 7.5 million tons to 15 million tons. And we also have opportunities to debottleneck our own operations. So we should be able to run over 17 million tons per year.
Champion's Phase 2 expansion was funded entirely out of cash flow, and the company is in an excellent position to finance further growth as the opportunity generated by high-grade iron ore evolves.
We've got a unique product that is necessary to decarbonize the steel industry. We've got decades of resources that we've accumulated over the past years, and we've got a proven team to be able to deliver not only our current operations, but also potential expansions.
In addition to the momentum Champion Iron has created, it's completed the 2024 financial year with a robust balance sheet, enabling it to continue its capital return strategy with a 7th consecutive semi-annual dividend. Surge Battery Metals is in the right place at the right time. The company's high-grade lithium discovery in Nevada is seen as a key find in the effort to secure America's lithium supply chain, and an important metal essential to the advancement of the green revolution.
Surge Battery Metals is the preeminent lithium exploration company in the United States of America. We're developing the lithium asset called Nevada North. It's in Northeast Nevada, and it contains the highest, best grade lithium clay in the United States of America. We have just announced our latest resource upgrade. That was in September, showing that it's 11.2 million tons, which makes it the largest lithium clay deposit in the US. And now we're on track to do what we call the next phase of development, which is the PEA. And that'll be scheduled for first quarter of 2025. It's really tied into domestic lithium supply, and that's the upside. America is seeking to secure domestic lithium production, and our upside is in being able to deliver that. The plan of operation will allow us to do more expansion in terms of drilling, and we'll also be working on the engineering towards the bankable feasibility.
Stay tuned to BTV for some investment ideas you won't want to miss.
The franchise model that we're offering is a scalable, light business model that grows very quickly. We're offering investors an opportunity to target the residential solar market.
We'll be right back. You're watching BTV.
Not only can BMO's asset allocation ETFs make investing easy, they can also be an effective vehicle for anyone looking to generate growth, as well as steady earnings from their investments, making them ideal for those entering or already in retirement.
BMO's asset allocation ETFs make building a diversified portfolio as easy as buying a single ETF. These all-in-one ETFs are built with a predetermined asset mix of globally diversified stocks and bonds that invest in index-based or passive ETFs. Instead of manually selecting ETFs to assemble a diversified portfolio, this ETF is managed and rebalanced on your behalf for a low cost of 18 basis points. The BMO All Equity ETF focuses on growth by allocating 100% to equities, while the BMO Conservative ETF has a more risk-averse approach with a 60% allocation to fixed income. With a wide variety of strategic risk-differentiated portfolios, investors can find a product that matches their goals, whether they're just starting out or nearing retirement. Visit bmoetfs.com to learn more.
There's good news for First Nordic Metals. The gold exploration and development company recently announced a $10 million bought deal. The net proceeds from the financing will be used to advance their 2 district-scale projects in Sweden and Finland.
First Nordic Metals is an exploration and development company focused on Sweden and Finland. Our flagship asset is the Barsley Gold Project, which is located on the Gold Line Belt, and that has a resource of 2.4 million ounces of gold in all categories. And around that, we have over 100 kilometers of strike. So the project itself is one of Europe's largest gold deposits, and our land package is the largest claim holding in Sweden. And then in Finland, we have the Oijärvi Greenstone Belt project. That has a maiden resource at over 300,000 ounces. It's a high-grade underground deposit. We have a very strong relationship with Agnico Eagle, who has been a joint venture partner on our flagship project, the Barsley project, since 2015. Agnico Eagle has now become a significant cornerstone shareholder of the company, coming in for 13.3% of the company. This area is very prolific for gold deposits. We think we have potentially one of the next major gold camps in the world.
Being a wealthy client can introduce a whole new set of circumstances when it comes to financial planning. I asked Thane Stenner of Stenner Wealth Partners to fill us in on some of the unique challenges this can pose.
It requires different thinking. It requires anticipation. It requires unique and fresh ideas and strategies. Not just time from point of view of experience, but actual working, specializing with people in your wealth category. I think that's a key point. When you move up into a different wealth category or snack bracket, basically what ends up happening is there's many other strategies, exclusive access to different products and services that now come into play that quite candidly you can afford. So it's something that people I think underestimate. You need to really seek out top talent, top advice.
Quantitative investing relies on a data-driven approach to make investment decisions. With over 25 years of experience, TD Asset Management's team is virtually unmatched in Canada. Here to talk about a small and mid-cap equity ETF is Managing Director and Head of Quantitative Equity at TD Asset Management.
The TDQUS Small Mid Cap Equity ETF is a quantitative fund that invests in small and mid cap stocks. And we do this using a quantitative approach to decide if we hold the stock in our portfolio.
Julian, how has this fund performed since inception?
TD has been one of the first to manage money using quantitative approaches, and it's been roughly 4 years that this fund has been in existence, and we've been outperforming our benchmark quite steadily over time, most specifically recently where we shifted our emphasis really to alpha as opposed to risk. Since then, the strategy has been outperforming steadily over time.
And what would you say makes this ETF such a timely investment?
It's probably a once-in-a-lifetime opportunity to invest in U.S. small mid-cap space at extremely attractive valuations, strong growth. U.S. small and mid-caps represent an amazing opportunity right now. I think this is literally one of the best funds we have in terms of pricing and in terms of the nature of the strategy, the research that we put in there.
Don't go away. More intriguing investment opportunities are on the way.
We'll be right back. You're watching BTV.
The often overlooked residential solar market is soaring, and one company is leading the way, Stardust Solar Energy. Joining us today is the CEO of this newly listed company. Mark, tell us about the focus of Stardust.
Stardust Solar Energy is the largest solar franchisor in North America. In Canada, we have 29 locations from Halifax to Victoria. And we also just opened our first location in the US in Columbus, Ohio. And really, that's the projection of the business. We're planning to scale up, use the public markets to raise capital and deploy our model in the US.
Excellent. For investors looking to get into the solar market, how does Stardust Solar differentiate itself from other companies?
The franchise model that we're offering is a scalable, light business model that grows very quickly. We're offering investors an opportunity to target the residential solar market.
Okay, explain a bit more about how the business model works for Stardust.
The franchise model moves and grows quickly without a lot of expenditure. So there's three ways that we make money primarily. The first is through franchising. So we offer franchisees the ability to buy a territory, and we charge a 5% royalty in perpetuity on their revenues. The second pillar of business is through our training. So we have training and compliance department that feeds our franchisee model very well. And that generates a tremendous amount of high margin business. It's an 80% margin column for our company. And then third, the largest revenue driver is our distribution. Every single nut and bolt needs to be ordered through head office. And that allows us to create a large amount of revenues through our franchise network, operating at about a 25% profit margin.
So you've gone public. What will you use the funds for?
It's actually probably the most important message that we want to offer the public. The fact that the use of funds at our company is primarily focused on growth. So what does that mean? We're going to be spending money on marketing, advertising, staffing, scaling up the operation. As well, we'll deploy capital in M&A, merger acquisitions, as well as investor relations.
Thanks, Mark. Well, there you have it. With an expanding presence in the U.S. and a streamlined, scalable model, Stardust Solar Energy continues to light the way forward in clean energy solutions. Thane Stenner is back with more investment insights. Thane, what advice would you give to someone who's about to experience a large liquidity event, like the sale of a business?
There's certain steps that an investor or somebody that goes through a liquidity event should be taking in order to optimize their proceeds. First thing is you got to make sure you have a great accountant. Second thing is you should probably have a tax lawyer involved to make sure it's structurally correct. And then thirdly, trying to engage with a wealth advisor that understands these sophisticated levels of what you're now encroaching upon. You're now going into a bigger level of liquid capital. Typically, it also takes them about 6 months to settle into their new reality. They've gone from business wealth to liquid wealth, and that transition takes some time. There's a lot of work actually to do in the first 6 months after a liquidity event and even prior to a liquidity event. So getting professional advice, guidance is particularly important at this stage.
Prime Mining is feeling the tailwinds at its flagship gold and silver property in Mexico. This underexplored high-grade resource, which has already more than doubled in size, continues to show excellent discovery potential.
Prime Mining has a high-quality gold-silver resource in the very prolific Sierra Madre Occidental Belt in Mexico. We're focused on adding value through continued exploration on our vastly underexplored property, while at the same time looking at technical de-risking for eventual PEA and project development.
In October of 2024, Prime announced a significant update for the gold-silver Los Rayos project, including the addition of a high-grade resource demonstrating underground and open pit optionality. The company is well-funded and has high confidence in further expansion of the resource.
At Los Rayos, we have approximately 70% of the in-situ value is gold and 30% is silver. Given the exceptionally high-grade core to this ore body, we're hoping that in the future we have a good choice between open pit or exclusively underground mining.
We just heard from a nice cross-section of companies and financial experts,
with a number of great investment possibilities to consider.
Thanks for joining us today for BTV. I'm Jessica Kachachak.
And I'm Taylor Tone. Hopefully today's show helped you discover some investments. Until next time, may your portfolio prosper.